Welcome traders to our practical application for our head and shoulders and also inverse head and shoulders. Please, should you didn't watch the theory, please watch lesson number 1 here, and then lesson number 2 I will explain here our 2 different trade opportunities. One second, let me open on my second screen the 2 opportunities. You can also open it. Here we will start. Okay. Number 1. Number 1, we will start here with the head and shoulders. We talked already about it, right? What is the head and shoulders here? And I think we took this example here. Again, guys, I have here a session practical application, right? I will talk in the chart with theory is already done. Look, important is that we have an uptrend on the left side, right? That is a head and shoulders. Head and shoulders is a trend reversal from an uptrend to a downtrend reversal, from bull trend to a bear trend reversal. That is the idea. And look, we have a clear an uptrend here, right? An uptrend, an uptrend, an uptrend, an uptrend. Uptrend always higher lows, higher lows, higher lows, and of course also higher highs. And then we got here a left shoulder, right? It is only a higher high and a higher low, right? Nothing different. Then another higher high, great, higher high, higher high, but then we got a trend break, and that is the number 1 here. It's a little bit advanced. It's not classic that we need a trend break. Okay, that we need a break of the last higher low. That's my own style. It's not necessary maybe for you. For me, it is necessary. I need a trend break here. It means we have to break the higher low, the previous higher low. Okay, that's my idea. You can skip this one. Okay, it's absolutely fine. Should the last previous higher low is still valid, right? But for me, I need the trend break that gives me more probability. Okay, means left shoulder, higher high and higher low, higher high, head, trend break low, lower high, lower low, left shoulder, head, right shoulder, neckline. Right, that's very, very easy for me. Always if at the tops here for the head and shoulders and a trend break. Okay, I'm ready looking for a head and shoulders. Okay, I'll draw this also a little bit different here by let's see. And now that is our head and shoulders, right? That is our head and shoulders. And now neckline, guys. The next step is, okay, next step is to draw the neckline. We will connect both shoulder lows. That is from here to here. I use a color yellow here, like in the theory. That is my neckline. It's very important, right? That we need the neckline to calculate our profit margin and also to find our entry. I will extend this to the right. And on this time, right, we will break the neckline. We can go short here. That means epsilon short here with a stop loss, and that is option number 1 above the previous pivot. Give me 1 second. 0 green. Okay, that means the 67.84, right? We are short a little bit below the trend line. Okay, activate an alert here, or we break the trend line. Okay, I'm ready for a short. Okay, that's possible here. We are short here at 67.75 around, and our stop loss is here above. And look at this. Remember, it is a trend reversal formation, right? It means we want to trade a trend. And look, high, low, lower high, lower low entry. We are filled. We get a correction, right? Another pivot, lower high, lower low. Here, unfortunately, and this is practice, that's practice, right? We broke this, we broken this this previous pivot, but end of the day, it is a huge downtrend, right? We got more and more weakness, and that is the idea behind. We will also calculate now the profit margin, and the profit margin is very easy. From the head high, vertical to the downside to the touch of the trend line. We will use here the color, let me use the color magenta. Okay, I like magenta. That's a range of 100%. We'll duplicate this one, put it below. That means this is our profit margin here. We can stay in the straight, can illustrate still this profit margin. Most of the time it worked nicely, right? Most of the time we will look to the left and we will find demand here, for example. That's the reason why we got the rally after that, right? I don't know why nobody can give an answer here of this idea, but most of the time, guys, really this profit margin make absolutely sense. That is so crazy, but yeah, it is, huh? It is like it is. Good. This is option number one. It's very easy, right? But yeah, you see, you will get not in one-to-one here with the profit margin, right? If you say in the straight, then it's fine, right? We get a little more than one-to-one, but the zone is huge. What we're gonna do here now is we will look for option number two. We will also check option number one for the inverted and shows later. And guys, here I don't have to talk about the seasonality, the COT. COT is not possible here. It's a Citigroup, it's a stock, but for futures. I think I don't have to talk about it because it is always the same, right? Very easy. It means we want to short here. Yes, okay, then check the seasonality. It is right now a seasonality selling point. Yes or no? It is not a seasonality selling point. It is a buying point. Don't short here. It is a selling point. Yes, fine. Then short and it's up. Then it's okay. It is only not today. For example, here today a selling point. It's a little bit 1 or 2 days above. Okay, use the opportunity and then wait for the selling point and then enter here. Right. It's fine. Same like valuation. Should you need a valuation, your valuation assets are overvalued. Okay, fine. Then take it, right? Bearish as it trading day of the month. Okay, wait for a cluster of bearish days. Period. It's not so difficult. Huh? Okay. This is option number one. We will talk about option number two also now. Here I will go. Guys, our idea is to increase our profit margin. Okay, that is the idea. And our option number two, based on the right shoulder, this is the right shoulder here. Okay, you are looking on a lower time frame for, of course, supply. Okay, that is the idea. So easy, huh? And I think I found something on the daily chart. 1 second, I need more data. Here's maybe enough. Nope. Give me 10 years. So look, and remember, guys, please keep your lines, your head and shoulders on the higher time frame, not on the lower time frame. Okay, and here, guys, that's the same sample like the theory. All of this is our supply, right? Sorry, not supply, our right shoulder. Look, this is a right shoulder. Yellow. Draw. All of this is our right shoulder. All of this here is our right shoulder. Look for supply. We expect a downtrend on this side. Left side uptrend, and here we change the trend downtrend. Okay, means where is our supply? And of course, guys, no brainer supply. It is here, right? It is here, no brainer supply. It is also in downtrend. No, not really. It is a high, low, lower high, not a lower low, lower high. Then we create here lower low of the previous low. That's fine. But then we got the low, right? That's fine. We have an we have a downtrend here, yellow. Oops. Come on, draw. High, low, lower high. Not a lower low, another lower low, a lower high, and then a lower low. That's absolutely fine. Let me connect the lines. That is a downtrend. Remember, the lower lows are not so important like lower highs in the downtrend. Okay, remember on the direction lesson, very important. Means we have our downtrend, and here high quality supply, right? We don't have to talk about it. That's clear supply. And here our idea is, okay, skip this the option number one. Look, the huge zone. We'll remove this one. We can trade this area here, or of course also on preferred. When we are using preferred, when we are using wider, first term is first element is freshness and also profit margin. Very, very easy, right? That means that's our preferred version. And look at this, really, really nice. We come back into our zone, hit this one, get a drop, perfect. It is a 1-to-1, 2-to-1, a little bit more than 2-to-1. Then we come back again, right, and we create our lower low, and then we have our 1-to-1, 2-to-1, but I don't know, maybe close to 3-to-1. More also here, a little bit more weakness, 4-to-1. That's absolutely fine. Here, that is practice. It's a real trading world, right? If you use a stop loss here, we get a stopped out. Okay, we get a stopped out then. We never hit our profit margin. Remember, that is our calculated profit margin. That's the reason why we have, remember, lower time frames are not the best, right? Lower time frames are difficult. Follow trends on the higher time frame, that's easy. But if you found an entry on lower time frame, it's trickier, not so easy to follow the trend, right? And here, what you're gonna do, guys, we have another option. That means we will not use this stop loss here above the supply zone. We can also move our stop loss. We can use it like the higher time frame stop loss. Remember on option number one, they use the same stop loss, but a different entry. Remember your entry last time was here around the 68. Now your entry is at the 72. Okay, now that is your zone. And then look, we got not a stopped out. We here, right, we are protected, and then we got the drop here, right? And easily we hit our profit margin. Look at this here, and also more and more weakness. Really, really nice, right? That is Head and Shoulders. Really, guys, look for this reversals here. Have an eye on it. That's very important. For me, one of the best reversals, trend reversals. It's not only price reversals, right? Sometimes we get, okay, that's a signal for correction, bearish engulfing, for example, in an uptrend. But here it means a trend reversal. We can expect a trend reversal from an uptrend to a huge downtrend, and you entered the downtrend here from the beginning, guys. That's important. Look at this, huh? You entered the downtrend from the beginning, from here to here. That's crazy. From 72 to below the 50. That's really, really crazy. And here into your demand also, right? That's really nice. My recommendation is check on monthly, weekly, and daily timeframes. Daily, not the best, a little tricky, but monthly and weekly were absolutely fine. Look for an uptrend. Wherever you have an uptrend, then okay, fine. Look for a trend break. That's my recommendation, guys. That's what I did. I'm looking for always an uptrend and then a trend break. That's more powerful for me. That's the first confirmation of a trend reversal. Okay, but it is again not necessary. The classic explanation or definition of head and shoulders, they're not necessary. That's not necessary to get a trend break first. Okay, then it means it's also fine that we get the shoulder, the right shoulder low on the same area or higher than the previous left shoulder height. It's all absolutely fine. Okay. Also, sometimes you will get if you connect the for example, we have like this, okay? Then your neckline looks a little bit different. Here, look, the neckline looks to the downside. Here, your neckline looks to the upside. Absolutely fine, nothing changed. Follow the rules, okay? Always connect the pivots. Connect the pivots. Important is that the head is the highest point and both shoulders, left and right shoulder, at the lower high. The high is lower than the head. That's it. Very easy. Good. That's it for the head and shoulders. Now it is time for the inverse head and shoulders. Okay. Let me show you something. Second. Let's talk about now the inverse head and shoulders. Remember, okay, it is different to our head and shoulders. Head and shoulders, oops, not red, come on. The head and shoulders is from an uptrend, trend reversal to a downtrend. An inverse head and shoulders is from downtrend to an uptrend. That means we need first and downtrend, okay? And let me draw here a little bit. It is a downtrend, right? Means we have a downtrend. Perfect, tick in the box. Now we got, let me draw like this. Draw this a little bit. So we got a low, lower low, a lower high, a lower low, okay? And then we broke the previous pivot, okay? We are trendless, okay? Then that means this is also a low, a high, and what is it? A higher low, then a higher high. That is a trend reversal, right? Downtrend left side, right side uptrend. And now let's check. That means it's different, right? Here now our shoulders and our heads are not on the upside, they're on the downside. Left shoulder, okay, right shoulder, head. Okay, I hope it makes sense for you guys. Look at this. Make it tense. I think yes, take a time. Look left side and downtrend. Here lower low, then a trend break, and here it is the same. It is not necessary to break the trend, right? First here, that's fine. We don't need this pivot above previous pivot. It's also fine, but for me it is necessary. Means downtrend, and here an uptrend. Left shoulder, head, right shoulder. We have the same rules here. Both shoulders must be above from the head. Okay, the head must be the lowest point here. Very, very important. And then how we can enter, guys. What we need to enter? What we need to enter? First, a neckline. We will connect here not the left and right shoulder pivot lows like the head and shoulders. No, the left and right shoulder pivot highs. Okay, we will connect this. I will use again the color yellow for it. Okay, this is our neckline, and I can also extend it to the right. Correct. And now the next step is our 100%. It is here. Color magenta and another 100% on the top. This is what? This is what here? Our profit margin, 263.75. That's our potential profit margin. Where's our entry, guys? Here. Where's our entry? Option number 1 is above. We will wait for the trend line break, for the neckline break, the yellow line. And where's the first point we broke the trend line? Neckline here, right? It means a little bit above. And stop loss. Where will be your stop loss? Below the previous pivot, plus 33% if you want. Okay. Color, oops. Color is green, of course. Our entry is 222.45. And this is our stop loss, 199. This is option number 1, right? And look, we are also still in profits here, right? We have more space to the upside. What means here option number 2? Option number 2 is we have to check the lower time frames, right? That means, okay, let's go from weekly into daily, and let's check where is our high quality supply, our high demand, where is our high quality demand on the right shoulder. Okay, which one is our right shoulder? It is everything here is our right shoulder, right? That is our right shoulder. Let's check where is demand. Very easy here to identify for me. Maybe you're a beginner and it's not so easy because you have here an decisive candle inside. I fully agree. I understand that it is not like picture perfect, but should you're a little bit more advanced, you will know, okay, that is fine. That's possible here for me. Okay, we can also talk a little bit different here to a rally-based rally. Okay, if you want, I like more to this one. I will remove here the option number 1. Option number 2 would be like this. We don't want to wait for the neckline, or we're not buying above the neckline. We will buy the lower time frame daily demand area, and that's this point here. Look, we hit the demand area here, and then we got the rally really, really nice. Of course, we increased our profit margin, right? That is a 1-to-1, 2-to-1, maybe 3-to-1. Here, this is, and in this case, it is the same stop loss like the option number 1. Remember, option number 1 is the stop loss below the pivot here. Okay, and the pivot is demand. Okay, that is the reason why we have a stop loss still here. We never moved our stop loss higher here. It's not possible, and that is a magic from the head and shoulders, and also inverse head and shoulders, also in combination with the seasonality, guys. Right? Of course, very easy. If you want to buy here and you will wait for the seasonality, yes, wait for the seasonality buying point, right? should this stock and not a stock, a future, wait for the COT, the commercials are bullish. Very easy. Okay, also valuation and trading day of the month also. Okay, that's it. I hope everything is clear. Should not, let me know below this lesson. You have a comment. You can comment here. Please mention me. Then I get the notifications and I can put this in my Q&A. Okay, that's it, guys. Happy trading with the Head and Shoulders and inverse Head and Shoulders, and have a great weekend. Bye-bye.